Hi everyone. In our next video for this trading course, we are going to look at identifying trend analysis within the price action on our charts. So the first things we need to look at when we're identifying a trend, whether it's a bullish trend or whether it's a bearish trend, we need to obviously have a clear directional bias on which way the price action is moving. So on this example here that I'm electing to choose, it is GBP pound against the USD dollar, which is also referred to as the cable. So if I look at the price action on this chart, I can see very quickly and clearly the price action has made a trend. It's obviously been in a pre-existing bullish trend. We've come up to this area here around 137, 137.50. We've initially paused, we've pulled back, and we've retested. So, and what's happened here in effect is that the price action has gone from a bullish trend. We've converted into a trend reversal pattern, and we're seeing the emergence of this new bearish trend. Now, normally speaking, when we have a clear trend analysis identified, we obviously see lower lows and lower highs. So in a formation, in a technical pattern, you tend to have lower lows, lower highs, lower lows. So that is how a bearish trend is laid out. So in this example, we have seen price action come into this level down here, which is initiating the first set of lows in this new bearish trend. Okay, so the new bearish trend has obviously been witnessed by this bearish move down here. Okay, so the first wave we can see new lower lows has been formed. And the reason why this is termed new lower lows is because these lows are the first set of paused impulses after the trend reversal up here. Okay, so we have the trend reversal, we have this double top formation, price actions rejected, and we've come back into this area up here to create lower highs. So in a bearish trend, we tend to have what's called lower lows, lower highs, and lower lows. So we can see here very quickly, after the brief pause in the lower highs, price actions continue to move lower to create new lower lows, and we repeat the process. We get liquidation on the short-term selling impulse, we get price action consolidating, and then we wait for the completion of the next move. Now, broadly speaking, given that the trend identified is referred to as lower lows, lower highs, lower lows, lower highs, and lower lows, we also have to take into consideration that there is potential for certain patterns being identified within the trend. So in this one here, we can see a very clear three drive pattern. So we've got the first wave, we've got a pullback, we've got a second wave, we've got a pullback, and then we've completion of the third wave. So we've seen three bearish waves with the lower lows, lower highs in the bearish trend. We've seen price action stabilize, and we've since seen price action revert back into the upside. So this is our bearish trend reversal, and price actions move to the upside. Now, if I invert this scale over here and flip the chart upside down, how would it look as if it was a bullish trend? So hypothetically speaking, if we call this a bullish trend, we have our trend reversal down here with temporary higher highs, with higher lows, with higher highs, higher lows, and higher highs. And that is how we identify trends within our analysis when we're obviously laying out our charts. So very clear, higher highs, higher lows, higher highs, higher lows, higher highs, wait for the price action to revert, confirm the trend reversal, and all of a sudden then we repeat the process on the opposite side. Okay, so I have got some illustrations there as you've seen in your text, both above and below this video. We can see identified examples with some text based on this, but this video is a very useful tool in terms of how to be able to identify trends within price action. Thank you.